For first home buyers like Cassie McLaren, breaking into the property market is getting harder.
Hi, I was just calling in regards to a property that you've got in Knoxfield.
The 22-year-old just got a job in real estate, but has had to call on her parents to help qualify for
definitely.
a home loan.
Did you have any time available later today? They helped me with the deposit, and that put me up to a better position, and I got up into the higher 600s, and that's given me a wider range to look at.
Cassie thinks the process should be easier.
The lending criteria right now is extremely stringent. I feel like there are so many things that we can't possibly meet.
To avoid masses of Australians defaulting on mortgages, there are restrictions on how much banks can loan. Lenders must apply a serviceability buffer to mortgages. Currently, that's 3%, meaning the lender has to test a person's ability to repay the loan at 3% above the variable rate they're being offered. But the politician heading a Senate inquiry into home ownership says it's time to lower that buffer.
Well, the Australian dream is falling out of reach for millennials and for Gen Zs. One of the reasons is that the lending laws are very rigid and blunt, and they give no quarter to first home buyers or prospective first home buyers.
Some of Australia's big banks, including ANZ and National Australia Bank, as well as the big bank lobby group, want changes.
Current obligations for assessing a first home buyer's serviceability don't account for their stronger income growth potential compared to other borrowers.
But consumer groups think the buffer needs to stay where it is. Staff at the National Debt Helpline have received more than 42,000 calls over the past financial year and say 30% are related to mortgage stress.
Behind every one of those numbers is a story of a person or a family who's really at a crisis point.
The boss of Mortgage Stress Victoria argues the problem isn't access to credit.
At the moment, banks have the ability to apply to APRA, and in fact regularly do, to adjust the buffers. So it's not that the system isn't working. It does appear to be a lazy solution to what is really a much more complicated problem around the need for more supply of affordable housing.
The nation's banking regulator, APRA, also wants the buffer to stay where it is. It told the Senate inquiry that Australian households already hold a lot of debt compared to what they earn, and the buffer is there to protect financial stability.
Our tools are not geared to solving an affordability challenge, but rather the provision of finance. And as the data said, it's holding up, and including for first home buyers.
Reducing the buffer will boost the profits of banks and their lending, while piling up risk and hazard for some of the most vulnerable people looking for buying a house in the Australian community. It's the wrong solution, it won't work, and we need to actually face the larger problem of growing affordable supply and protecting renters.
Come this way.
But for Cassie, getting a home loan is the difference between breaking into the housing market or being stuck renting forever.
Hey, good girl.
Giving a lot of people more confidence that they do have access to funding and, a choice is just amazing.
A choice many young Australians want as home ownership gets further out of their reach.